Welcome to this video on hammer patterns. In this video, you will learn about the formation and meaning of a hammer candlestick pattern, and you will be able to interpret the direction of trade to take. Based on this hammer candlestick pattern, you will be able to determine the entry price and where to set the stop loss from a candlestick. Since it is a hammer pattern, it will definitely look like a hammer. This candlestick pattern looks like a hammer. But how is this candle formed? It's a green candle. Therefore open is less than the close. The market opened here. But after the market opened there might have been an initial negative sentiment where bears were in control. Hence the market fell and made a low here. However, institutional investors and traders became alert over this price. The price looked cheap to them. So they started buying, which made the price rise higher and higher. Then it closed here making a high at the same price. In this hammer candle, the close price is the same as the high price. The hammer pattern always indicates bullishness. The lower wick is pretty large, and it is what caused the market to surge from this point to that point. Therefore we would expect this bullish trend to continue, and the right thing to do would be to buy as we expect the market rise to continue. That's where the next question comes in. At what point should we enter the trade and where should we set the stop loss? It depends on whether you are a risk taker or risk averse. So if you are ready to take some risks, then you can enter just before the close of this candle. Let's say this candle is a 15-minute candle. At the 14th minute, you can see that a hammer pattern is going to be formed. You can then initiate a buy position very close to this close price. This becomes your entry point or the place where you buy, which is equal to the close price of this candle. But no strategy is foolproof. There is no such thing as 100% assurance in any trade. Hence we should have good risk management in place. We will also define our stop loss here. The low price of this candle will act as a stop loss. These are standard rules which are followed by all traders. The rationale is that it will give you sufficient room for your trade to move in the expected direction. For example, if you keep the stop loss here, there are chances that in the next candle the stop loss might get breached. Then the market will continue to rise as we had expected. So keeping to the low price, we get sufficient room. Someone might say, why not keep it even lower? It depends on your own risk appetite, but keeping it very low will make sure the stop loss never hits. And even if it hits, it would be too late, and you would have already incurred a major loss. So we'll keep the low of this candle as the stop loss. One important rule of the hammer pattern is that if the body of the candlestick is 1x, then its shadow or wick has to be at least 2x. For example, if the body is 2, then the shadow has to be 4. So if the candle is forming in the ratio of 1 to 2, then only we say that it's a hammer pattern. This is how we quantify it. There is no room for subjectivity in interpreting a hammer pattern. What kind of trade would you take if you see a hammer pattern form such as this? Will you buy or will you sell? If your answer is to sell, then it is a wrong answer. The red color can be quite deceptive. The actual answer is to buy. The answer will become clear if we decipher the price actions. So this is open, and this is close. The open was very weak, so when it opened the market fell to 95, which is almost a 7% fall. But subsequently, there was a massive buying frenzy, and the market recovered 5. Indicating that the market is bullish, which we expect to continue over the next few candles. Remember the basic assumption of technical analysis. The market moves in trends. This is a good place if you see a bullish red hammer to initiate a buy position. But when it comes to the comparison of a green hammer versus a red hammer, the green hammer will definitely stand out. Though when it comes to a red hammer versus other candlestick patterns, the red hammer will be considered a bullish candlestick pattern. That is all for this video.